All right. Hey guys, today we're going to take a look at crude oil, gold, silver, and a currency pair, the euro dollar. Let's dive into the crude oil chart and give you some actionable levels through the lens of Elliott wave. All right. So, this massive move that we had late last week was really a very nice five-wave move, struck right into this ratio box. It also coincided with a gap. Now, you guys that are inside of the Professor Trades Club knew that the top of that gap was up here. And the biggest clue for me was after this initial shove up and retrace, what I started doing was looking at the 1618 up here, and I decided to buy the dips. So I was lucky enough to get long down in here. And then on these dips, I made several additional ads, remaining small enough on my ads because you don't know where this is going to bottom. So I stayed small because I already had a core position. So I just kept adding a little bit on these various couple of pullbacks. And then eventually I stopped adding, took it all off. And then I started adding back to longs a little too prematurely, but the key is to stay small. So here are the levels that I'm looking at for crude oil in terms of Elliott wave. So these gray fibs are the support zones. The first area that I would expect to see some kind of a bounce is right in here. Just call it, actually, you could call it 69, I suppose. And it would close this open gap right here. Is that gap still open? Let me zoom in here because the way that zone that I put on there. I don't see that gap now like I did before. I wonder if I can see it. Is that maybe it's just a toss? Okay, there it is. That's pretty weird. So when I look at it on the 21-minute chart, there is a gap. It depends on your data feed. But the point is, there's a gap in here. So I think because prices come down too far for this to be a wave four. Now I'm getting in a little into the weeds of Elliott wave, but originally I was thinking this would be a wave four with one more shove higher, which is why I started adding a small position. But now that this has come down further and I add it again, I keep buying this pullback. Now I think what's going to happen, and I'm taking some heat, and that's fine based on the size that I'm at. It's quite okay. I'm trading this structure now, and getting this gap fill and then hitting these fibs right here around the 69 level seems like a good place for a bounce. So what I'm going to do is watch price for the reaction that it has somewhere down in these fibs, just call it 69. It is entirely possible that this is an A, B, and we are getting a C wave down into these levels. So there's really the two levels that I'm looking at. If price doesn't hold roughly the 69 level, there's a couple fibs here. I won't get into the weeds of Elliott wave. I'm just giving you the levels. 69 can dip below 69 and get some kind of a bounce. So that's what I'll be looking for to see the nature of that bounce. Is it going to be looking like an impulsive five wave nano move, or is it even going to bounce? I mean, if the easiest thing to see would be this comes right through this level, okay, 69, and keeps coming. That would be the easiest thing, actually, because then I'd look for it to catch support somewhere down here and bounce. And then I'll look for one final shove down. This yellow fib at 68.30, 68.24. You've got the 764 fib down here just below 68. So I'm giving you kind of like a 35-cent area. But ideally, this is the ideal area of support is 68.24, 68.30 if this level doesn't hold. So really what I'm giving you are these are the two parameters I'd be watching. Call it 69 and call it 68.24. So I know that's a 75-cent window. But if you're a scalper, look for a bounce. Once it closes this gap, look for a bounce to scalp long. If you're a swing trader, I'm kind of both. What I like to do is look for a swing entry, stalk a swing entry. That's really what I'm building into here is a swing entry. Now, if it bounces, I'm going to add if seen, if given a chance. If it doesn't just come straight down through, starts rattling around here, I'm going to add and I'm going to take it off. I'm going to scalp this position because ideally what it does is come back down one more level down into here where I'm going to add back and stay long for a ride back higher. Now, for the purpose of this video, I'm just giving you levels. Okay. I'm going to go on to gold now and go on to silver and some EU. But then I'm going to go back to the longer time frame. So if you want the longer time frame to how did I arrive at these levels I'm showing you now, stick around. All right, so let's take a look at gold, just giving you some levels. Now this chart, this is my homework chart. I'm actually going to show you something very simple. I'm going to delete. Where's the trash can? I want to delete all of these markings, hide drawings, delete. Where do I delete all drawings? No, I could have sworn I had to delete. If I just say hide all, I want to actually, oh, here, trash can maybe? Yeah, remove all, look at this. I'm wiping it all out. I'm deleting all that. Yes, remove them. And I'm going to just, on this lower time frame for gold, I'm going to give you an idea. We're going to know, is this the top? Was that move up there the top? If it is, consider this 5 down with a retrace, 27.72.40, 27.72.40. And what we're really always looking for, if we think we have a 1-2 on our hands, we're always looking for the 1-6-1-8. Okay, I mean, as the initial parameter. Anytime you think you have a 1-2, you're looking for the 1-6-1-8 extension if you think you have a 1-2. There's a lot more to it than just, oh, well, I'm just going to throw these on there. You got to look at the longer time frames because it's all about context. It's the context of price. That's what Elliott Wave really gives you that no other methodology that I'm aware of gives you, is the context of price. So if gold has truly topped, then I would expect to see a follow through of something like this. And forgive the timing because I'm not dialing this in. I'm just showing you. And also, I know that degree is it's not going to be. It's going to be something more. We'll get back to this. Something like this: 1, 2, 3, 4. A 5-wave move down. That's really is what is going to be very convincing to me that the top is in. Otherwise, you're not going to get a full move down. If this is corrective as a wave 4, now look, without the context, you may not understand what I'm saying, so I'm just giving you the parameters. It really needs to hold very soon and start bouncing and make a new high above 27.72. So look, if it doesn't come back up above 27.72.40 very soon, early in the week, then the odds are going to start supporting the idea that the top is in. And sometimes, just to remind myself, I'll go ahead and grab this tool right here, just to remind myself, is this the top? Because it certainly could be. And if the reason I'm thinking it may not be a top is, if this can be 3, 4, 5 to finish off the nano structure of this wildly longer structure that I've been showing you guys on the daily chart. So this could be, if it is the top, this could be 1, 2, you get a nasty move. So one of the parameters, if this is still going to be a wave 4, the pretty much max you would want to see is the previous lower degree wave 4. Okay, which would be here. So if you get below 27, 22.10, if we keep coming down and get below this level without seeing a new high, I think the odds are shifting towards the high being in. So this space right in here is really where the question mark is. So is it, maybe you're short. If you're short, I'm not stopping out. I'm not short. If you're short, 27.7240 is your warning. You do not want to see this come back above there if you're immediately short for a swing trade lower. If you are short, if you're lucky enough to have scalped short up here somewhere and you still have a short position, what I would do is hold it. And I would look for this to break this level, eventually break this 100 fib at 27.13 and make it all the way down to at least 26.90. So this is kind of the target zone. If you're already short, you want to see price get down into this window down all the way down here. That's what you want to see if you are short and if you think the top is in. Okay, so 26.90 to 26.77. That's your target if you're already short. 26.90, 26.77. If price comes back up, we are still in the area. It could be still a wave 4, but the reason I'm thinking the odds are leaning towards it not being a wave 4 right here is because of the severity. This is clearly impulsive down, where for a wave 4, I wouldn't necessarily want to see that. I'd want to see more complex corrective structure. This looks impulsive for the moment. So I'm going to give price the benefit of the doubt. So, and by the way, if you want to get short and this bounces up, sell. And one way to, I don't want to make this video too long. So let me just keep the parameter simple. 27, this is for bears. Don't want to see above 27.7240, and your target is at least 26.90. All right, that's the deal. So silver, kind of a similar thing. Now look, I'm zoomed in here on silver. If you're inside of the club, the Professor Trades Club, you'll know I put this X there, and this is a timing fib. And the idea is if price gets on the other side of this line and gets below this parameter of 33.47, opens the door to see lower levels. Well, look at that. I mean, it exceeded past this timing fib. It got below this level, and look what it did. I mean, vertical, just dropped. So what I did is started getting out of my larger long position, but I'm not short. I just took off. The way I short metals, usually if I'm in a swing trade, the way I short metals is I take off longs. I don't actually short. So I've taken off longs. I have a much smaller position. And here comes price. So what would be ideal is if this is no longer a wave 4, it could be a wave 4 of a larger degree. Now, look, I'm in the weeds of Elliott wave. So let me keep it real simple and just give you the parameters. I think it can come down below 32.38. I mean, it's already, in terms of where it already has filled out this 5-wave structure for a C wave, it needs to come down a little bit lower and get into this zone down here. So I really like this zone for the final shove down. So what I'm going to do is if price comes down here, now I'm mixing in a little trading idea with my analysis here with these levels. My plan, if price can come down and get into this zone and bounce, what I'm going to do is wait. Now, we've played this game many times. It's the same game over and over again. Wait for what looks like an impulsive, smaller 5-wave move up and buy the retrace for the next wave up, which would be a wave 5 that points a lot higher. See, the reason I love Elliott wave for the context is where you're wrong. Like, for example, me putting this X here and having a timing fib and clocking this structure lets me know where I am wrong. Not because I'm into being right or I'm trying to be right and I don't want to be wrong. No, I want to know where I'm wrong based on parameters, because that's where the magic is with Elliott wave. That's where the fib levels are going to inform you where you're wrong. So the only chance this had was to be a wave 2. In other words, 1, 2. But in order for it to still be a wave 4, it could not get past this timing fib and get below 33.47. And that's what it did. So it's no longer a wave 4. This must be a deeper wave 4. So in other words, this already is the higher degree wave 3 that I was immediately looking for up here, already topped. So it's a question of degrees. Now, it may be over your head. If you're an LA wave person, you know exactly what I'm talking about. If you're not, keep hanging around these videos and you will learn it over time. So now what I'm saying is, if this is the larger degree wave 4, which would be composed of 3 waves, you have wave A, B, And now we are finishing off a C wave, which a great majority of the time is composed of 5 waves. So that's what I'm clocking, and that's what these parameters are about. I'm clocking a 5-wave move down. Now, technically, this already made 5 waves because it got below the level of wave 3. Wave 4 held where you'd reasonably expect a wave 4 to hold. But I think what's happening is it's going to come down and give you a proper wave 5. Does it mean it's going to happen? No. So, but it may happen, and that's what I'm looking for to happen. So ideally, this comes down, gets in this box, and bounces. So the next parameter is 32.38 right here. If it gets below 32.38, I think it is more likely you're going to see inside of this box. And that is a decent short scalp if you're into that. But I'm afraid to scalp short very much in metals because when it starts ripping, it rips your face off and it breaks fib levels to the upside. We've already seen it over here to the left. My mistake, well, it's not a mistake, but I was wrong because I thought this was a lower degree wave 3, 4, and needed a 5 immediately. But now what it's looking like, it's a larger degree wave 3, 4. And that's why this is a higher degree wave 4. It's getting deeper, but it's still holding the structure of what you'd want to see for a 3-wave corrective pullback. So there's your parameter. Now, it can get deeper if it wants as a wave 4, but the real parameter, I really do not want to see it get down below 31 and technically 30.94. Look, if it keeps coming, man, that's going to be a huge clue. If you see this thing get below 30.94, and if it doesn't hold support in this area, that's your first warning. If it doesn't hold 31.75 and it keeps coming and gets down here below 31, that's a huge warning. But taking it level by level, parameter by parameter, this is the next ideal area of support. And we want to see 5 waves up so we can buy the retrace and then stay long and look for much higher targets. All right, so last thing in terms of giving you parameters, looking at the EU, this bounce got a little bit higher than I would like, but if you know, I was clocking this in here, clocking these yellow fibs. It extended just about the max, which now has me thinking this is not well, I think this is an important top, but the count is going to be different. I think it's going to go deeper than I originally thought. So for the moment, the parameter is that should be the high in the EU for a while, for a week, 2 weeks, 109058. So what I'm looking for is to add to my shorts if this bounce up, but right now I'm riding a smaller position than I wanted to have because it extended higher, so I became more cautious. But the way this is looking impulsive to the downside, a parameter would be this top 1.09058 would be considered an important level. And if you want to build into a swing short, in other words, instead of buying the dips, sell the rips. Any of these bounces I'm going to be adding. I think it's very likely what could happen is this keeps coming a bit before it gets a meaningful bounce. I mean, anything can happen, but I'm looking for these lower levels down in here. Okay, just call it 1.063 for now because I need a bounce to measure from to project on the more nano basis. But based on what I'm seeing at the moment, looking for 1.06325. And these levels are clear parameters, including right up here, 108.394 right here. You could see a bounce, but getting below there, maybe it gets down a little further and back test this area. Great, short it. Sell the rips. If it bounces from here, sell it. Just going to be selling it until if it keeps coming against me and gets way up here. Now, if it does it from here, that's fine. I'll sell that. But if it comes all the way down here and then gets back above here and keeps going, something else is going on. But I'm looking for lower levels. All right. So, guys, now I've given you hopefully some massive value in a short amount of time. If all you want is those levels, you've got them. Rewind the video, write the levels down, see what happens. Now I'm going to go back through crude oil from a longer time frame perspective. And now I'm going to give you a little bit more of the Elliott wave value. Now that you've gotten the levels, I'm going to still try to keep it brief because I don't want to make these videos too long. And look, if you're watching this for the first time and you're getting the value, please like. I love it. You encourage me to keep making these videos. Smash the subscribe button and hit the notification bell so you'll get notified when I drop these videos. Cool. Let's go back now and take a look at crude oil at a longer time frame. So looking at the daily, now I did do a lot of homework yesterday on this daily. I remember very well what I was calling these triangles right here. This looks really good as a diagonal. By the way, this is a daily crude oil chart, December contract. Important to know if you ever look at my levels and go, wait a minute, I'm not getting these levels. It's probably because we're not on the same contract and I am using a linear daily chart because why? It just happens to be lining up better on the linear than the log. I flip back and forth. I don't talk about this much, but I'm always flipping back and forth between log and linear. That's over here. Logarithmic. If it's off, it's linear. If you turn it on, it's log. This is measuring so well on the daily. This is about the only thing I can say that I like about the crude oil structure because basically I don't like the crude oil structure. It's moving in threes all over the place, which makes it very difficult. So in a diagonal, waves 1, 3, and 5 can be composed of three waves, which typically in a standard impulse, as you know, waves 1 are composed of 5 waves. Wave 3 is composed of 5 waves. Wave 5 should be composed of 5 waves. But in a diagonal, those waves can be composed of 3 waves. And obviously, when you get a wave 4 bounce, it gets into the price territory of wave 1. Well, guess what? In this case, wave 3 barely even made it past the level of wave 1. So naturally, the bounce for wave 4 was already in the territory of wave 1. This is a nasty structure to try to trade. And I love Armando because he's actually able to scalp this thing. It doesn't matter that it's so messy on a bigger time frame. And from an Elliott wave perspective, it's very difficult as a three-wave structure. But if you're scalping inside of the Professor Trades Club with Armando, you don't care about any of this. You're grabbing those pips, man. You're scalping. But you can still catch these impulsive structures on the lower time frames inside of this larger, complex three-wave structure. Okay, I know I just said a lot, and I'm sorry if I'm creating a word salad for you, but I'm trying to teach you this stuff. Okay, so for wave 1, 3 waves with a B wave triangle right in the middle, A, B, C. And look, the 100 fib, as you know, you've been following me long enough, you know the yellow fibs are me trying to measure a 3-wave move. Well, A, B, C hit the 100 fib, almost hit a penny, within 3 pennies. That's crazy. Then you get another ABC move for wave 2, also coincidentally hit the 100 fib within 3 pennies. Is it coincidental? You tell me. 1, 2. Then for wave 3, you look for another 3-wave move. Is there another way for me to measure this 3-wave move? Yeah. AB with a B wave triangle, hitting not quite to the 100 fib, but close enough. And then you get a bounce, 3-wave move for wave 4. Wave 5, could it be composed of 3 waves? Absolutely. A, B. Now this really extended. This C wave really extended down, but it measured nicely as a 5-wave structure in terms of proportions. It came down and struck the 300% fib as an extension for the C wave almost to the penny, and then bounced in a 3-wave move that this extended. This is a large 3-wave bounce. So really now I'm going to I'm going to extend this concept of this being a large 5-wave move down. I mean, this is a massive move down. It's almost $20. It's a humongous 5-wave structure down as a diagonal. And then what you expect to see is a 3-wave bounce. But the nature of this pullback, this is a horribly ugly, disgusting pullback, which suggests B waves. So watch this. Because of the whole way this thing is always moving in threes, if we go like this, A, and then this low is the low, 66.72. 66.72. See, now if you try to do this at home and you don't have my exact settings, meaning the December contract in linear mode, you're not going to get the same levels that I'm getting. If you are in the December contract on linear mode, you should be getting the same exact levels that I am getting. If you're not, try again. All right. So the idea here is if this is going to create another ABC move, you're looking up there for the ultimate target. Now, look, it's not like I'm trading for that right now. I'm saying I'm presenting parameters. Okay. if this is going to give you another larger degree, A, B, C, like so, something like this, okay? And there's going to be a higher degree, it's going to be higher, sorry, it's going to be at least that degree. Uh, so so the reason Elliott wave takes so long to learn, and it's very difficult method. The power and the value of the method is really about the context that it gives you, the context of price. There's no other methodology that gives you this level, these types of levels that you can perceive the context of price and knowing where you're wrong. For example, you put on these assumptions on the chart and you're going to know where your assumptions are wrong. The thing I like about it is it's objective. It's kind of like you want to know where you're wrong. You want to know where the parameters are so you know when you're wrong and you can readjust. You say, well, this must not be a wave 4. If it's coming too deep, maybe it's a wave 2. So we remeasure. Look, the charts I'm showing you represent a whole lot of time that it takes me to measure these things and remeasure them and know where you're wrong. So, but the more you learn this, the more you will start to see it. And if you're not seeing it yet, just stick with the parameters I'm giving you. Just stick with the parameters. You keep watching the videos. You keep allowing me to teach you how to fish using Elliott wave. I promise you, it is going to start making more sense. Certain things are going to click, but it is not the easiest method at all. You can really hurt yourself if you try to trade these wild projections without knowing exactly what you're doing and knowing where you're wrong. So let's talk about this for a second. So this A, B, and the nature of this move. Now you already know because you watched the first part of the video that this 5-wave move. Let me give you the context. Like I'm telling you how great Elliott waves is for context. Well, let me show you the context. So this is clearly 5 up. I mean, it measures well as 5 up. It only came to the 1618, but the internal structure is really nice. This is a very clean 5-wave up, even just exceeded the ratio box with a few wicks and could not get up. And then it had a nice retrace, very nice, and then total capitulation and just crash. This is awesome. This confirms that this is 5 up. So if all of that I just showed you is right here, just on the daily chart. So if that's 5 up, this is coming back down for where a wave 2 should be. So now let's do a little speculation. Let's continue to talk about the context of price. After you see a 5-wave move like this one, a convincing 5-wave move, what is the most likely thing to happen after a 5-wave move? Well, you get a pullback. So if this is wave 1, because if you get a 5-wave move, that's impulsive. So what other wave would be impulsive right here? Could be an A wave. But based on where I'm already determining that I believe this is an A, B wave. So because if you understand Elliott wave and you know that a C wave, a great majority of the time, is composed of 5 waves, and this is 5 waves up, I'm going to consider this wave 1 of C. This is the context that you are never going to find anywhere else other than Elliott wave. Now, look, if it's too complicated for you, I get it. Well, you don't even need to watch this video. Just catch the levels. I'll give you just the levels up front, but I'm giving you the education. So if this is wave 1 of C, then let's grab the fib projection tool. Now, this is a little speculation. So if this is the low, I'm going to turn on my magnet. If this is the low, it's 66.72. And this is the top of wave 1 at 71.45. Then the wave 2 pullback, just as a speculative idea, it's not unusual at all for a wave 2 to hit the 618. It can exceed that. In fact, most of the time in crude oil, wave 2 does exceed it. But just for the sake of this example, I'm going to just put my fib of this projection tool. First click when at 66.72. Second click when at the top of what I'm thinking of as wave 1 at 71.45. Third click goes at the 618 just as a placeholder. And now I'm going to grab my template for a impulse because we know that wave C should be composed of a standard impulse. And what I'm looking for is to see what kind of fibs are near that 100 fib. And I got to say, I'm kind of delighted that this projects really nicely. If this is wave 1, and we are in a wave 2 pullback right now. I like how this 200 fib is very near that 100 fib, which is the ideal target. But as you know, as I've explained in almost every video where I have any yellow fibs, the standard fibs for C wave can be 100, and the next one is 1236. The next one is 1382. So we are going to be able to dial it in. I rather like that 100 fib because the 200 fib is so nearby. This would really have to extend, which crude oil can. There's no reason why crude oil can't extend. But even if it did extend to the 2618, I love how the 2382 and the 2618 in white are kind of encapsulating the 100 fib. That is called confluence. So also, like if you look over to the left, look at that. You've got that level there. So, one of the ways we dial this in to get more exacting is once this bottoms, if this catches support. Now, let me actually add let me take off these lower fibs and add an extension. If this wants to extend and come down, all we're going to do, now this is where guys that throw me shade on YouTube and make critical comments and point out that, haha, you're wrong, or your video, you said this, but that didn't happen. Now you're just changing your labels. Of course I'm changing my labels, because if price breaks a level, it's going to the next level. And that's where I'm looking for support. So of course my labels are going to change. So let's get back. So what I'm showing you here is if it doesn't hold the 618, I'm not even predicting that it's going to hold the 618, wherever this bottoms at. And we just know from experience that the 618 level to all the way down to the 886 is not an unreasonable level to see crude oil catch support. So wherever it catches support, see this line over here, this level, wherever this current price wave finally catches support, I'm going to look, maybe it already bottomed. I don't think so, but let's say it did. Well, I'm going to move this up to there. Let's say it comes down. Wherever it comes to, I'm going to move this level, and that is where the low, I'm going to put this tool. And look, it's obvious. If I'm dead wrong, it's going to break 66.72. So on a longer time frame, 66.72 is a meaningful level right now, because it, according to what I'm looking at, the way I'm measuring this whole structure going back weeks and weeks and months, is very reasonable to think that this level, it's reasonable to think that this level is the low. Am I predicting that level is the low? No, I'm not like refinancing my house and going long on crude oil because I think that's the low. I'm saying is more likely that is the low than not. But if you're a poker player and you need one card to get a flush. I'm a Texas Hold'em guy, you have a 3% chance of getting that card on the river. If you need a flush and you only got one more card coming, that's a 3% chance of that happening. And guess what? It happens. I've hit that exact hand playing Texas Hold'em. So it's possible, and I don't know what the odds are, but it's possible that this comes down and breaks that low. Well, that's going to be a wonderful parameter. Okay, but for right now, that's what we're dealing with. Okay, so that is the way we think of this. So, and then if I go down one level just to get a little bit more specific. So if I'm looking for level 2, this is a 4-hour chart. So now you're getting a little more granular, right? The 4-hour chart, you're looking for price to hold somewhere in this area. And just for consistency, let me put the 764 even on this chart. I would have rather seen this bounce sooner. It didn't. It just kept coming. But that's why I have two different levels when I showed you at the beginning of this video, and I showed you these levels right here, meaning it's either going to hopefully catch support right here, but if it slices through that and comes down to 68.24, that's right in here. Actually, that's just dipping below the 618. I like that. So that would be the idea, is we catch a bottom. Now, we don't have to speculate and try to bottom tick. What we can do is if this comes down and gets just below, actually, here's the same 618 right here. So if it just dips below this 618 and you see it start to bounce, if you are looking for a swing trade, that could possibly produce a massive amount of pips. What you would do is be very patient. Let price catch support wherever it is going to catch support. And the clue is going to be we want to see 5 waves up and a 3-wave correction, because what I will consider that is just as we are thinking this is wave 1, 2 of this degree, we are also going to look for wave 1, 2 on this 21-minute chart. And it's going to be very similar fib levels because of the fractal nature of price. I know, talking a lot. Hopefully this is making sense to you guys. I want you to capture the educational value of what I'm showing you, because I'm basically teaching you Elliott wave. So anyway, so now I just tied it all back together with the first parameters I gave you and why I'm looking for those parameters and what is the upside and where I'm going to be wrong. Okay, below 66.72, I'm dead wrong. This is just wrong. Something else is going on. But what I think is happening is what I just showed you. So now let's hop, okay? So now let me just take an interlude here to say, thanks for sticking it. You made it this long. Elliott wave is difficult. It's difficult to learn. It takes a lot of time. There's a lot of details. There's a lot of seemingly conflicting information because you don't understand the whole picture yet. It takes time to develop the understanding of the context. You got to look at the long time frames to get the overall context. Then you keep coming down and you keep measuring the subwaves. Okay. And we're going to do that in gold. Now, look, when I zoom out on gold, this is remarkable what I'm about to show you in gold. This chart has been in the works for a year. This ratio box on the daily gold chart has been struck, and we did get a rather strong reaction from that area. Now, speaking of log, linear versus log, when I blink gold on the daily chart back to linear, this top, it is definitely hitting the top of this ratio box for this purple wave 5. If I go to linear, it is a perfect strike of the 200 fib, which is what you want to see for a 5-wave impulse. I mean, it's a dead strike of that level. So that has me leaning towards maybe the top is in gold. It also, it came up short on a nano basis. It came up short on that ratio box. So there's a little bit of mixed messages on the daily. But if I just use the KISS principle and keep it very simple, the 200 fib is where you would expect to see the 5th wave terminate on a standard impulse. And that's what happened. Look at that reaction we had from that level. And there's a ratio box there. And there's a 2.236 fib over here that is absolutely reasonable. Actually, let me move that to the 2. Let me see where the 2382 fib hits on linear, because I did not look at that. Oh my goodness, look at that. So I go to linear. Talk about confluence for gold having possibly topped in a major large degree wave 3, which means months of corrective action in gold. Like gold may have already topped. There's a fib 2382 of this purple structure. There's the white 200 fib, also of a different degree, showing you a top, and there's a ratio box. So that's 3 things. And there's just the structure 1, 2, 3, 4, 5. So there's a bunch of confluence saying gold top. So the biggest clue is if it really did top, then at some point it's going to start building out the wave 4, and it could do that in a complex manner. So if it needs one more high, meaning see this right here. Now look, I'm giving you the alternative. This is the alt count. What I just showed you is if this is the 3, 4, 5, and it's already topped. But just looking at the nanostructure, it is now look, you have to allow for possibilities, right? Because there's no certainties in trading. If gold is going to make one more high and just get one more shove up, and look on the daily, that would be no problem. If it makes one more shove higher, there's a ratio box here and it could extend. Sure. No problem. Actually, now that I'm looking about it, let me see where the 2236 falls on the white fibs over here. I will not be surprised if that is inside of the other ratio box. And I must not, what am I doing? 2, 3. Oh, sorry, here it is. Boom. Okay, just above that ratio box. So the point is, if gold hasn't already topped, and if it's gonna, if gold is gonna catch support down in here, so it has to catch support very, very soon. It really does. If it's going to make one more high, it's got to hold support really soon. Otherwise, it's just going to, the top is in and it's going to come down. If it gets below 27, 22.10, I think the odds are shifting. Even if it bounces, I would expect it to bounce, because even if it makes a three-wave move and then another three, it can move in threes, because inside of a larger degree wave 4 like this, it's a horrible structure to trade. Fours are horrible structures to trade unless you're trading like Armando trades, in which case you don't need to be concerned with this larger context from an Elliott wave perspective. He's grabbing the larger context in terms of levels, pure and simple levels. Armando's going to be scalping this wave 4 no matter what gold does. I'm really talking to swing traders here. Okay. So hopefully I've just dropped some education and hopefully I didn't confuse you. It's the same idea with silver. It's the same idea with oil. It's the same idea with the UJ or EU or whatever currency I'm looking at, or the GJ. It's the same concepts over and over again. You know, this is a large three-wave bounce. Here's the yellow fibs, GJ I'm talking about. So I want to be short and I want to see this come up higher so I can short it. And I longed it from down here. And this is the game we play. In Elliott wave, you're going to look at the longer time frames to get the overall context, and then drill down on the lower time frames to try to glean insight into what is really or possibly really going on. And, you know, similar to gold with silver, I don't want to zoom out too far, but it's similar with silver here. Is this just going to catch a larger degree wave 4? Is silver going to catch a larger degree of 4? And what I mean by that is, see this 3 here? It's really, look, I don't want to make you crazy, but this, I'm going to make you crazy. I'm going to show you, you guys that criticize Elliott wave, I'm going to show you how you change your view. Look, when things change, you change your view. If you're a lawyer in court and then introduce new evidence, you got to change your tactics, change your strategy. And some people actually use that metaphor for trading, like almost like being a lawyer. You're presenting your case. Here's why I'm doing this. Here's why I think this is going to happen. Here's what happened in the past, Your Honor. So with Elliott wave, when things change, you change your view. So it's possible that it's really this degree. I got to turn off the magnet. That I was off by a degree because it's this 3, and we were getting a larger degree wave 4, which would allow it to come lower. And the internal waves in purple here, it could be more like this. This is the 3, 4 of this degree, and this is the wave 3 top that I was looking for over here. But the parameters are amazing, because the reason I could make that determination is because it broke this level in both price and time. Let me repeat that. Silver broke this level in both price and time, which opens the door to see a larger degree wave 4. Okay. And inside of this C wave, it is very likely, let's just say 3187. Let me just move this down to 3187. And you see how it's the lower time frame that gives me the details. It's the larger time frame that gives the context, and it's the lower time frame that gives you the details. So we would still be looking for a wave 5 of this higher degree, but now you see I would need to go back and remeasure, which I haven't done yet. All I'm looking for, the reason I haven't done that yet is the reason I'm looking for where the bottom is going to be, and I want to focus on that. But since I've opened this can of worms, look at where this 3 may have topped, just above the 1618. The reason it made it confusing is the purple count also This wave 3 goes with this 1618. So it came shy of that, right? But the larger degree is totally reasonable to expect to acknowledge this as being the top of wave 3 because there's a larger degree 1618 right there. So this is okay. And then it's coming back for a larger degree wave 4. And silver often extends. I mean, honestly, it almost always extends the internal and the larger structure. So for this wave 5, I would not be surprised if it extends at least to up here. Call it, look at that, 38, 36. That's crazy. So is this worth attempting a swing trade to try to catch that kind of move? Yes. And I've been doing this from, way over here the whole time. I've been catching these moves. This time I was wrong. I really thought it was going to catch support much sooner than that, but it didn't. Okay, so there. So I said it. I was wrong. Are you happy now, you guys, those critical guys? But I was wrong with knowledge. I was wrong with foresight. I was wrong knowing where I was wrong, and now I've adjusted the game plan. Okay, so hopefully now that I've created like a giant word salad, hopefully you're learning from this. You capture the levels in the first 5-10 minutes of the video, then you get some education afterwards. Thanks for watching, guys. Good luck this week. I'll see you at the open. If you're inside the club, love you, man. Thank you for the likes. Thank you for subscribing. If I don't know you and you're brand new and you're just watching this and you're getting value, stick around. If you really want to get value, hop inside the Professor Trades Club. The link is in the description of this video. You will not be disappointed. At less than $1 a day, it's rather insane. It's insane. At less than $1 a day, man, this is the only club you need to be in. You're going to learn how to actually trade, the psychology, the approach, and you're doing it in a group, which allows you to rely on the group to be consistent. You're going to get a lot of unexpected accountability. Just knowing this many people, we're all watching you. We're all working together. We're sharing trades. Armando is leading the way with the mindset. He's a king of mindset. No more emotional trading. No more revenge trading. No more moving your stops all over the place. No more guessing. No more hoping. It's about parameters and it's about Fibonacci. Anyway, I'm talking long enough. I'm excited now. I'll see you guys in the room. Thanks for watching, and I hope to see you on the next one. Bye-bye.